Good. So should we move on to the next part, which is the monthly reporting? So the two parts of it, the requirements monthly, and also what are good reports to run every month that councillors would like to see.
So the main things, the ones that we recommend in Scribe that everybody would want to be using are firstly the summary report, which will look like this one here, which will enable you to monitor your actuals against budgets. So what you're seeing here is your annual budget. You've got all your codes down the left-hand side with your budgets against them. It will pull through your actual figures and then it will give you a variance. So this is the one where you can see what's happening so far at the point at which we're at. What is the position against our budget? Are we overspent? Have we got a variance, etc.? What do we expect to happen? Do we need to move the budget around? Do we need to have a look at some of these costs in a bit more detail to see what's going on, for example? So that's a really good sort of summary of what's going on and something that your councillors are very likely to want to see with regards to what's going on against each code. And also because you're splitting out the different areas, if you have got certain sections, you can provide the information. So you may have one for the village hall, for example, different committees might have their own section, so then they can easily run that and see exactly what the position is within that area. Okay, that's the summary report.
So summary report is what you budgeted and versus what's actually happening, so you can do something about it, or you know if you're on track or if you're off track, and you can change it around.
Absolutely, yes. So you can see what's going on. Things, if you're overspent in certain areas, that'll flag up and you can see, and then you can identify why that might be. There might be a perfectly legitimate reason for that, but equally something might be wrong. You might have miscoded something, or it might be that you will need to look at address that for the end of the year because something, overspending is going on somewhere. So to get a bit more detail from that, then the detailed cost centre report here is really, really useful because that will break it down. So if you do identify something on the summary report that is looking a bit odd, you're overspent, people are asking questions, you've got meetings and saying, how have we spent this much money against this code? You can run the detailed cost centre report because that will break it down for you. So this one is giving you the supplier and the description details. So everything I spent against grass cutting, for example, is listed out so you can instantly see what that is. It might, and also we recommend that people run this periodically and just cast their eye down it and check, because it's very easy to see here if you've miscoded something and it will pick it up for you. So for example, under my printer code, I've got this for electricity. So that's helping me identify where I miscoded and I can get it right. So once we get to year end, if I know everything's in, I know it's coded correctly, then I've got less work to do at the point at which it comes to actually creating the year end accounts. So that's the main ones with regards to looking at budgets. And what's behind the scenes. If you want to get into a bit more detail, you can look at this monthly flux budget report. So the summary report is based on the annual budget, so the total budget for the entire year. This one will break it down to a flex situation. So this is cumulative to the year to the month, sorry, that you want to run it to. So if I ran it to September, for example, this would give me a half year position. Very similar to the summary report, but we get a year-to-date budget figure. So if you've looked at flexing your budget, which basically means identifying what you expect to spend on your budget on a month-by-month basis rather than just thinking about it annually. This is often for larger councils who have more spend going on and managing it sort of month by month rather than looking at it as a total. Then you can see what the spend is against a certain point. So for example, in here, I've got a total budget for the preset to 17,000, but actually I know it's all going to be received within the first half of the year, so my budget is flexed accordingly, whereas these other items are simply half of it because I've spread it out evenly over the year because I don't know for certain when these items are going to come in. So that's another sort of more detailed way to manage it and quite helpful if you're thinking about it on a sort of monthly basis in there.
Okay, so I get this. So monthly flex budget is the same as a summary report. But when councils don't just want to do an annual basis, they want to do certain things in certain months, they can do that so they know they're on track in a much more granular view than just doing it once a year.
Absolutely, yes, because if you had situations where you had large budget items that you knew were going to be spent all in the first half of the year, you could run that report and look like you're going to end up overspent, but actually that's because all that expenditure incurred in May and June, for example, and nothing else is going to be spent. So that's an easier way to see that, and you'll be sort of clearer way to see that actually it's not because we're over budget, it's because we're in line with when the budget actually falls within the year itself.
No, any questions on the flex budget?
It's interesting that I can see there's also a quarterly flexed budget. Is it the same thing? It's just that you probably don't want to do it monthly. Maybe you have a quarterly meeting and you look at that.
It's just a different way of doing it, really. So it's set with quarters if you want to, but the other one works better. This is more of a list form, less like the summary report, so it's more listing it out. So generally I prefer the monthly flex budget because it's got that similarity to the summary report, and that can then be used alongside it. But again, this will build up. So if you wanted literally a list of quarters, if I ran it to quarter 3, for example, it starts to get quite a lot of information. But if you wanted to be able to see quarters alongside each other, then you've got that starting to build up. And as you can see, you've got the third, and it's showing you sort of a bit more information, just in a different way, depending on what you want to see.
Thank you.
Okay.
So what other monthly reports are important, Hannah?
Yeah, so that's the summary reports talking about in terms of budgets, actuals, all that kind of thing. So with regards to your monthly meetings, the bank reconciliation is really important. So that's something that we would recommend that you reconcile your bank on a monthly basis, because that will enable you to be sure that everything's as it should be, that your reconciliation is up to date, everything you've recorded in your cash book therefore is correct. So this one that we can get in Scribe, so you tick the items off against the statement, that's your physical reconciliation process in Scribe, and then that will enable you to run this reconcile all banks report in here that looks like this. So this one actually produces with this prepared and approved by at the top. So if you want to take it along to formally sign it off at meetings, you can do that, which is a nice feature on there. And then you've got the information here. So our bank reconciliation is at the 30th of November. So it's a month end date generally that we'd recommend you do it to, because then that will work when you get to the end of March for your year end. And this top section, so A here, is what we're reporting in Scribe. So cash in hand, so this is our opening balance as at the 1st of April, so our starting position for the financial year. Receipts for the time period added on, payments for the same time period subtracted to give us our current cash in hand cash book figure on Scribe as at the 30th of November. That is then compared to the statements. So these statement balances we have entered in here. So my 30th of November statements had these figures in here. Scribe will then adjust for anything unpresented, so items that I've entered onto Scribe that as of yet haven't gone out of the bank, so checks that haven't cleared, for example, and then be adjusted. So B is our adjusted bank balance, and what we're looking to see is A equals B, i.e. Scribe matches off to the bank. So then you can take this along, you can have it alongside your statements, because these balances come directly from those statements. Sign it off to confirm, yes, that as at the 30th of November, everything was reconciling and accounted for.
Great, and that just, if you do it every month, you know exactly where you're at.
That's the really important thing, because then if it doesn't balance, what you'd see down here at the bottom, you'd have A doesn't equal B, and it'd give you a figure what it was out by. And so if you do have a reconciliation difference, if you know that it reconciled at the end of October, you know you've only got November then to deal with regards to finding the difference, which makes it so much easier than having to think about sort of 6 months to trawl through to find where that discrepancy is. And often that can be quite tricky. We do get lots of calls about people who can't find their reconciliation differences. So that's the bank reconciliation. Summary reports with regards to what we're looking at. And the other one, the main one that people like to use within Scribe is this under list reports, which is the transactions report, because there are so many ways in which to filter it. So most of the Scribe reports have this advanced option, which gives you a filter option, and this one has loads in here. So you can use this transaction report to look back. So if you wanted to provide a list of everything that was paid in November, for example, you can do that and take that along. But what a lot of people also do is they enter their invoices in ahead of time, and then they can take it to create a payment listing report for payment approval at their meeting. So it saves them having to type up a separate list to take to their meeting and then type all the information to Scribe as well. What they can do is enter the payments on Scribe for the invoices they expect to be approved, dated the next meeting date, or maybe the day after, if that's when they'd end up physically making the payment. They can then run with this report on that date. And what they'll then get is a list. So I've run this for the whole of November, but if you imagine I'd run it for 15th of December, because that's when we've got a report, for example, a meeting, sorry, for example, I've got then this report, so 5 entries, whatever it is, that I can take along and say, these are the payments that need approving. If they're then approved, then they're on Scribe, brilliant, good to go. If anything needs amending, maybe one's not approved or a value is changed, you can just then go and amend that on Scribe and update that accordingly, so that then matches off. And you've then saved yourself having to create a list outside of Scribe that you then have to type in as well. So it's a sort of a bit time saving there as well.
Okay, so the process for the transaction report, one good thing is to get this payment list to be approved. And the way you do that is you enter all the payments that are going to happen, you date them the day after the meeting, after being approved, when you can actually make the payment, and then you print them out through here, and then they sign them off at the meeting.
That's
if
it.
something doesn't get signed off, you take it out of Scribe. That's it.
Absolutely. Yep, you got it. Yep, that's it.
Great.
Brilliant. So that's the main one. So generally what you want to take is something like this. So you'd want a payment listing approval. You also might run something like this that can look back and say this is everything that was payment that were approved in November, or the things we've received. You then have your bank reconciliation to confirm that you're up to date, it reconciles according to the statement, so you confirm position's correct. And then you'd have your summary reports and your budget reports, so you can see the current position to help you then make decisions about future spend, etc., and what you expect to happen for the rest of the remainder of the year as well.
Great. So we've got the bank rec, the summary reports about the budgeting, and then the transaction reports, which is
that's it. Yeah, so they'd be the main ones. Yeah, absolutely. Yeah.
Which ones of those do councils have to do every month, or do they not have to do any?
They say because some councils won't have a monthly meeting. Some smaller ones will have a bi-monthly, for example. So generally, I would recommend that they would always do a bank reconciliation. You don't have to, but that would be something, because for transparency and be able to prove that yes, it does match the bank statement is a really important thing, because it shows that it's up to date, it's accurate, it's as it should be. And again, the summary report to show what's happening against the budget is something else that's really important. But again, it's possible that a council might not have a budget, or at least might not have a budget to that level, and again that's harder to monitor. But obviously if you can, it makes it so much easier then to manage things, and it's so much clearer for people who want to see that information, to see actually what's going on. So again, if those things can be done, then that's great. But I think in some instances it probably isn't always done. Shall we say?
Diplomatically.
yes.
Which causes more problems down the line.
Absolutely.
If the transaction is 5 or 6 months back and it's causing the cost code problem, it doesn't balance.
That's so true, because it can be a small amount that you could identify quite quickly, but if you've left it and not identified it, and it's so true, because often clerks, they haven't always got the time, and it is a tricky thing to manage. But actually finding that little bit of time every so often just to keep it up to date, do it monthly, enable you to monitor, does pay dividends at year end, because once you get to that point, you're ready to go, rather than having to look at your pile of paper and think, right, I've got to put 6 months of data on before I can even start. And that's a tricky thing when it comes to it.
Stitch in time.
Yes, indeed. Absolutely.
Are there any questions on the reporting there?
I have one question, Hannah. Let's say I have made a mistake and it shows up and I realise, oh dear, I need to go and edit a transaction. Technically, I don't know, is it true that you're not supposed to be editing transactions in your software package?
So Scribe will allow it, but so it's all about managing in the most appropriate way. So some of the things obviously won't have a much effect if you go and amend it. So if you've just put something on, so if I go to payments here, so these, when I go here, this is all my list of payments, all the ones I've previously entered, most recent one at the top, as you can see. So if I click into one of them, if you've just put it on and realise you've made a mistake, obviously just go and amend it. You might have missed a number off the invoice number. That's not going to have much effect on anything. And it's about keeping it accurate, because some software, other software, almost goes to an nth degree, that once you've saved it, you can't change a thing. And that infuriates people, because you might just have made a minor typo that then ruins everything, and it's a big issue. Within Scribe, you can amend it. So if you've just changed something and you want to amend it, that's absolutely fine. However, if it's obviously something where you're looking and thinking, hang on a minute, the value's wrong, the VAT type is wrong, the coding is wrong, that's going to have a bigger effect, particularly if it's a month or so old or older, because you've probably run reporting where it's against that report, or you may have done a VAT claim where it's in there, or something more significant in there. If you do that, then you've got this option to do a VAT/code correction here. What that will do is picks up the entry that you've got here, and then it's going to create two additional entries. One which reverses it out. So the initial entry is completely reversed out with the transactions exactly the same, but then you've got a new entry that replaces it. So this gives you an audit trail. You can then make the adjustments with against this entry. So rather than just of editing something, you can see the trail of it was initially coded here, then it was reversed out, then it was coded there. So for larger corrections, or in more important corrections, you could do this because you've got the audit trail. But for things where you've just mistyped somebody's name or missed a number off the invoice number, you can just go and edit it and amend it as you need to.
Thank you.
Okay. So you can edit transactions in Scribe.
You can, yes.
Like other packages, a bit more difficult potentially. But you have to be mindful that if it's something that's involving a value or a VAT, that you have to use the VAT code correction, and then you've got area 1 where you cancel out area 2 where you correct it. But it's something small like a change of description or a change in reference number or something like that doesn't affect the calculations, then you can just go ahead and change it.
Yeah, it's all about being mindful of how important and significant the change is. If you've just literally put the entry on and you've mistyped the value, then it's not going to have any effect because it's not going to be reconciled. You're not going to produce it to any reporting. Just amend it. If you further down the line find out that you put VAT on it and it didn't have that, then obviously it's important to correct that like this, so that then not only is it corrected in the future VAT claim or VAT return, but you've got that record of how you corrected it and when, which of this will retain. And as you can see here, it's got the initial voucher that it relates to, so then you can look back and say, yes, I can see this is the original, this is what then was incorrect. You've got that audit trail for anybody looking back at it.
Okay, so in a given month, say in November, in 15th of November, I added the transaction, and then I go back on the 25th and realise it's wrong. I can just get rid of it because I haven't done the reconciliation.
Absolutely, yes. So yeah, so it's
then,
if you haven't reconciled it, and often a lot of the time you'll pick it up when you're doing your bank rec, because if you put a figure in wrong, obviously a reconciliation, you'll go to tick it off and think, oh, that's wrong. You can amend it if you've not done anything. But at the point when you've reconciled and you've produced your reports, if you go later than that and think, oh, hang on a minute, this wrong, this is where you can then correct it, because you can then see. So otherwise what you'd end up with is you might have a year-to-date report where you've got one figure against a code that then reduces, and then if there's questions about that, you've instantly can see how that's come about because you've got that correction, rather than just somebody going and amending something that then is harder to track.
So the concept is that when you've done the bank rec and the reports, that's kind of like, that's the barrier.
That should be where you see yourself, yes. If you've got to that point where you've reconciled, you've run your reporting, you've had your meetings, you provided that information out, that should be in your mindset about if you then needed to change something, thinking, hang on a minute here, I think I need to do this audit trail correction, voucher correction, rather than just going and editing an entry.
Great. Does that answer the question, Mel?
Yes, thank you. Very good.
Any more questions on transaction editing or anything on that from you, Mel?
No, I just like that there's an audit trail, because I think the advantage of that is if you do have a clerk that's up to mischief, which it unfortunately, sadly does happen, but there's a trail of it, which is I think a good thing. Whereas in Excel, I think you can change things as you like, and it doesn't keep your an audit trail. So thank you.
Yeah, the other actually important thing to note as well, what it will also do is it will tell you the last updated date as well. So this one's not picking me up in here, but what you'll get that. So obviously it will say last updated today because we've entered it. But if you went back and looked at something in July and it said it was dated today, you can instantly see why something's changed here. So that does, and it does tell you who's done it as well, which is particularly good if you have got multiple users that access it. It then does enable you to see who has made entries and what date is the last updated, which is a helpful thing as well if you are concerned about anything like that where things might be going awry.
It's interesting actually we talk about the VAT and the Excel as well, Mel, because we often talk to smaller councils who have not many transactions, and they say that with their spreadsheets they use, they can get everything right, but actually looking in here and looking at the amount of things that have to be passed through the VAT in the right place, the corrections and so on, it's very tricky to do that in Excel.